Hey guys, welcome to Crypto News, your daily source of info. Before we start this video, let me remind you that I am not a financial advisor. Remember to always do your own research before investing in an asset. Now let's begin. Bitcoin drops 15% against Japanese yen, outpacing declines versus USD as yen carried trades unwind. The yen's strong performance, rising almost 10% against the USD in 3 weeks, led to the unwinding of carry trades, contributing to the sell-off in risk assets and causing significant market volatility. By Shouri Amalwa, Omkar Godbole, August 5, 2024. Bitcoin's yen-denominated price on the Tokyo-based Bitflyer exchange dropped nearly 15%, significantly more than its dollar-denominated price on Western exchanges. This was influenced by the yen's sharp appreciation following Japan's interest rate hike. The yen's strong performance, rising almost against the USD in 3 weeks, led to the unwinding of carry trades, contributing to the sell-off in risk assets, including Bitcoin. Bitcoin's BTC yen-denominated price tanked nearly 15% on the Tokyo-based Bitflyer exchange, registering bigger losses than its dollar-denominated price, which fell 11% on Western exchanges. Trading volume on Bitflyer has surged 241% in 24 hours, topping the $220 million mark, according to CoinGecko. The steeper drop in yen terms stemmed from the Japanese currency's sharp appreciation in the foreign exchange markets. Japan raised interest rates by 0.25% last week, leading to a strong yen and a corresponding drop across risky assets including Bitcoin. The rout deepened after Tokyo opened on Monday, with markets across Asia ending the day at a loss. Japan's Topix 100 index recorded its worst session since 2011, and Nikkei 225 was down 12.4%. Meanwhile, crypto futures traders saw their worst day since March as liquidations on crypto-tracked futures crossed the $1 billion mark in the past 24 hours. The Japanese currency has soared nearly 10% against the USD in 3 weeks, a staggering increase for the world's third biggest reserve currency, and the one preferred by traders worldwide to fund purchases of risk assets. The Bank of Japan raised rates last week, boosting the yen's appeal and triggering the unwinding of carry trades. Some say this contributed to the start of a sell-off in risk assets. Carry is a trading strategy that involves borrowing an asset or currency at a low interest rate, such as the yen, and investing in an asset that provides a higher rate of return. The unwind of the carry trade is more a symptom of popular macro trades being taken off, as we have seen multi-sigma moves across asset classes, and hedge funds are forced to unwind positions for P&L protection. Augustin Fan, head of insights at Sofa.org, told CoinDesk in a Telegram message, Japan has been a source of P&L income from USDJP longs and Nikkei longs. So the unwinding of these main sources is likely to suggest very muted risk sentiment and risk appetite going forward, Fan added. On X, formerly Twitter, by Adam Kutrader, I quote, "The sharp rise in the JPY USD is causing a massive unwind of yen carry trade positions and contributing to the sharp decline in US stocks." For those who do not understand how this works, a brief explanation. 1. Many traders were borrowing Jap Yen JPY at low interest rates, converted them to USD, and used this to buy US stocks. Now that the Bank of Japan BOJ is raising interest rates, the JPY has strengthened significantly against the USD. Now these traders are in big shit. Not only must they pay higher interest for the JPY they borrowed, they are now facing huge forex losses as well. The USD assets they are holding may not be enough to repay the JPY they have borrowed. This is causing a huge unwind of these trade positions. Traders facing big losses and margin calls are selling their US stocks to raise USD, converting back to JPY and paying back their loans. 4. This can lead to more selling pressure on US stocks and even more declines in the short term. Middle East war escalation, US political uncertainty is also adding to the fear and panic. As an investor, this is great news, because this type of short-term crisis and panic is what gives me the opportunity to scoop up high-quality US stocks at bigger and bigger discounts. Take advantage of temporary mispricing caused by short-term crisis. This is how we get richer. End of the quote. Some remain optimistic, however, and suggest that the market could be making a local bottom in the coming days. The recent pullback resulted from the broader market tightening in Japan's economic policies, where the central bank's hawkish stance shifted to surprisingly raise interest rates. Lucy Hu, senior analyst at Metalpha, explained in a Telegram message. The bearish macro data in the US sent investors worrying about a possible recession. However, despite no formal confirmation of a rate cut by the Fed in September, the market is priced in the event, and we should expect a rebound in BTC price when the macro environment improves, Hu added. Thank you for watching. Make sure to subscribe, like, and share for more videos.